how did one man get so powerful in this $40 trillion market?
Well, this man, more than any, I think, is really emblematic of how much the bond market has grown and how much of a bull market this has been. For 30 years, annualized returns of 10% you're talking. I mean, for bonds, this is just, coupon plus principal bonds, right? That they've done so well in an interest rate cycle where interest rates were coming down. And, now...
Right. Well, Nigel Hart with us with BlackRock. I know you cannot specifically speak about PIMCO. Those are fair terms. But I think to both of you, it speaks of the end of the total return era. We've had a time of coupon plus capital gain, and Mr. Gross and others all of a sudden had to fight for the coupon. Do I have that right, Lisa?
Yeah, well, absolutely. I mean, you've got, and actually, if you look at bond returns over the past year, the actual price return's been negative. The only thing keeping the bond returns afloat over the past 12 months has really been the coupon payments. So, this has been actually a sort of secretly down market, really, if you look at it. So, this is a very tough market for bond fund managers to navigate. It makes it even more difficult when you're managing a $222 billion fund that has to maneuver quickly in a fluctuating market that has to make, they can't go around making, betting on one particular credit and hoping that's going to, one particular corporate bond and hope that's going to help their performance. Yeah. You've got to move in size. You've got to make macro bets.
It's really difficult to move the needle, isn't it?
Exactly.
Okay, well, that being the case, Bill Gross's total return fund will no longer be under his management, and he's moving over to Janus to manage this unconstrained bond fund. What does this say about the size of these bond funds? Because he was having so much difficulty generating the returns with that massive fund.
A lot of firms over the past number of years have actually closed bond funds to new investors when they get too big. You've got Vanguard, for example. They did that with a bunch of bond funds last year. A lot of big bond fund managers have said, listen, when bond funds get too big, you become the market. If you want to make a trade, every trader out there knows the trade that you are going to make.
Nigel Hart, away from the discussion of PIMCO, do you believe that the size is problematic for fixed income funds?
Yeah, I think so. I think there's a direct trade-off between performance and size.
Because we know that in equity. We just understand it.
Absolutely, yeah. It's even more so in equities, I think, especially when you go down the market tier range from small and mid-cap funds. Definitely a cap on those funds is warranted.
So, Lisa, now that he's managing this unconstrained bond fund, what can he do at Janus that he couldn't do at PIMCO?
Well, first of all, he's going to have less money, which is probably going to be a benefit to him, frankly, because he'll be able to be more live and be able to sort of act in real time. You see even the total return exchange-traded fund that he also oversaw significantly and consistently outperformed the $222 billion fund.
Which is a point of contention.
Yeah, exactly.
The headline in the Wall Street Journal, billions fly out the door. At PIMCO, granted, it's $10 billion. It's a drop in the bucket. Will this disrupt the area you work in day-to-day, junk bonds and investment grade?
Well, that particular fund is really investment grade bonds and
full faith and credit.
10-year Treasury yields, tips, Mexican bonds. And yes, that could have an effect. It depends how. And so we'll have to see. If they have to really sell in mass, that could definitely move the needle.
All right, perfect day to have Lisa Abramowicz with us as guest host on Surveillance.